All right, so welcome into the live stream today. We're going to be diving into DEXs, a little bit about how decentralized exchanges may become a very interesting place in the future, especially around the ETH merge, all that's happening in crypto, and also the opportunities that they represent. We'll dive into that deep. My name is Paul Barron. Welcome back into TechPath. Let's get into it today with Antonio Juliano, who is the founder and CEO of dYdX. That's how you guys know them out there, so I want to welcome him to the show. Great to have you.
Hey, thanks for having me.
Excellent. All right, so first let's get into it, Antonio. Some of our audience out there, very advanced traders, they probably maybe are even dYdX customers, but we have a lot of new people and people that are just now experiencing decentralized exchanges for the first time. Let's break down dYdX, because you guys do things a little bit differently. You got a lot of big changes. We'll break down some of those. But kind of break down dYdX for our audience.
Yeah, absolutely. So dYdX is one of the leading decentralized exchanges right now in terms of trading volume. So we do about $1 billion or so of trading volume every day. And we're a little bit different, like you mentioned, than most other decentralized exchanges in the sense that we're mostly targeting advanced traders. And specifically, we're offering derivative products. And more specifically, we offer perpetuals contracts, trading in a decentralized way. So we were kind of one of the first to bring perpetuals contracts and derivatives to decentralized exchanges. And then fast forward to now, like I mentioned, doing about $1 billion a day in trading volume. If you're not familiar with perpetuals, they're the most popular type of derivative contracts that's traded in crypto. And financially, it's very similar to what was kind of innovated on and brought to the market by BitMEX. And now they're available on Binance, FTX, obviously dYdX, and a couple other decentralized exchanges. But yeah, that's kind of who we are. We've been around for about 5 years at this point. So some of the DeFi OGs. And yeah, we're excited to be one of the leading decentralized exchanges today.
Yeah, and I think for some of our audience, maybe you're new out there into crypto right now, and essentially, you probably are on a Coinbase or an FTX or something like that. Being a centralized exchange, dYdX obviously is very unique in the aspect of a decentralized exchange where you're essentially using your wallet. You could even literally use your ledger through a MetaMask connection to use that as a source of being able to fund a dYdX account. So that's kind of how they work. For the most part, if you're here in the United States, I know a lot of our audiences worldwide, it's a little more of a step. I mean, obviously, I'm not going to tell anybody that you have to use a VPN, but those are the simple ways that you can get access to some of these kinds of services. Let's get into the transition to V4, because this is kind of your transition into a fully decentralized platform. What are really the big steps for you guys to take to become that?
Yeah, so let me talk a little bit more about what dYdX V4 is. So our current product right now is what's known as a hybrid decentralized exchange. That means we have some centralized components to the exchange. This includes the order book and order matching engine. And then we have some decentralized components to the exchange as well. These are, of course, our smart contracts that run on the Ethereum blockchain. And more specifically, we're actually built currently on top of a layer 2 called Starkware. With V4, what we're building is a fully decentralized version of dYdX. So that means all of the components of the entire exchange will be fully decentralized. Our company, which is kind of the core team in dYdX Trading Inc., will no longer be involved in the operation of dYdX. And it's just kind of this step. This was always the long-term plan, but this is the kind of the final step towards decentralization. And specifically what we're going to be building, which we're pretty excited about and happy to dive more into, is a new type of decentralized exchange built on a new standalone Cosmos-based blockchain.
Right.
So we're going to be building our own chain, basically, and happy to dive a lot more into that.
Yeah, I mean, that's the exciting, one of the reasons we wanted to get you guys on the horn today, because we really are looking at a very interesting aspect of how decentralized exchanges are starting to really go to market. Obviously, for the most part, you've got exchanges like dYdX who have been integrated into ETH for quite some time. This move is pretty significant. I think it does mean and have some implications around the whole ecosystem of crypto as a whole. So I want to kind of break into those. When you look at the fact that, especially, first of all, I want to kind of get an idea, because I know a lot of people may not necessarily understand how you guys make money. Because obviously, if you have zero fees on trades and or very low gas fees, if any, in many cases, obviously with the layer 2 solutions, how would you guys do this? Is it strictly on spread? Where is dYdX making their
So
money?
we do take trading fees actually. We also have free trading for what we call retail users. So everybody has their first $100,000 per month in trading volume free on
Okay.
dYdX. And then after that, we charge fairly typical for centralized exchanges, maker and taker fees on the exchange, starting
Yeah.
at 5 basis points and then going down to 2 basis points, which is relatively standard. So that's kind of the main way we make money right now. And that's been a pretty profitable business for us, actually. So especially with the level of volume that we're doing up into the billions of dollars per day, that does end up being quite a lot of revenue, which is nice.
All right, so there are a handful of competitors in the market, not many that are running on perpetuals, especially on layer twos. You guys have obviously made the decision to move into Cosmos. What was the big, I guess, the big reason for shifting over from, especially from ETH, since we are going to proof of stake now with the merge, all of that happening? I do want to ask you about the merge and kind of how that might be an implication around dYdX as a whole. But what was the central thesis behind going and flipping to Cosmos?
Yeah, so I touched on it a bit before, but the really central thesis was we want to be fully decentralized. So we want all of the aspects of the exchange to be decentralized. So let's maybe take a little bit deeper of a look into how dYdX works today. And then I think that'll kind of inform the thinking on why we chose Cosmos. So right now, like I mentioned before, dYdX operates in a hybrid way where the order book and order matching engine run centralized, basically just on servers. And then all of the trades that happen through the matching engine roll up to Starkware, which is our layer 2 scalability provider. But the kind of unique thing when you're running an exchange is order books require extremely high throughput. And the reason for that is because most of the throughput is taken up by market makers, HFT traders, and other kind of institutional type clients trading with really high frequency. So to kind of give you a rough sense, dYdX processes about 10 trades per second right now, but about 1,000 orders are placed and canceled on the order book every second. And that's just a really high level of scalability that we need to operate our product. So we thought to ourselves, well, like, how do we bring this same product and the same level of experience in a fully decentralized way? And we took a look around, and one of the kind of high level theses we have is that we're really not necessarily aligned with any particular blockchain or any technology. And we're always keeping an open mind and just want to build the best possible product with the best technology. So we have been built on Ethereum up until this point, and as I mentioned, now built on a layer 2, which rolls up to Ethereum. But we took a look around and we were basically like, well, no blockchain right now can process 1,000 transactions per second, and especially they can't process 1,000 transactions per second with very low fees. I mean, maybe Solana can kind of get close to that, but we don't have 100% of Solana to ourselves. So, like, what are we going to do? Like, how are we going to build this order book in a fully decentralized way? And kind of the key innovation that we came up with, which I think is really novel, and we're really excited to build this out, is we're building what we're calling an off-chain but decentralized order book. And the technology we're using to do that is Cosmos. And the reason Cosmos works really well for our use case is not necessarily because Cosmos is way more scalable than all the other blockchains. It's roughly kind of the same order of magnitude of scalability. But that's actually okay for our use case, because if you go back to what I was mentioning before, we're processing about 10 trades per second right now. Obviously, we're looking to grow, but Cosmos can handle that level of throughput on the trade side. And the cool thing that Cosmos gets us is just a huge amount of customizability, because when you're building your own Cosmos blockchain, you're literally building the core node software ourselves. Like, that's what our engineers are building. It's like the node software that will be the validators for the dYdX network. And basically what we're doing is we're putting an order book into all of the validators, and then the validators and themselves are kind of doing the matching. They're running the entire network. So that lets us get like a much higher level of scalability, because the validators don't have to come to consensus on what the order book is. they can basically just process it off chain, which allows for like 100x plus greater scalability.
Yeah, that's huge.
And then once people match, then you like put it on chain. So yeah, that's kind of the thing that Cosmos uniquely enables.
That's a killer way to do it, I think, and it's very efficient as well. With that, do you see low fees still being the kind of the baseline of really what you guys are built on? Is this not going to change, right?
Yeah, absolutely. There will still be really low fees. And the other cool thing we can do with the Cosmos network is there will be no gas fees, which is really cool. There will still be trading fees, but they'll go directly to the validators and the stakers, kind of in the way that they're going to us right now. Like in V4, they'll just go to the validators and the stakers. And that's just much better user experience, because when traders think about trading, you don't want to pay like a flat fee in gas every time you're making a trade, right? You're just used to paying some low amount of basis points for your trade, and the new network can definitely support that.
Let's talk a little bit about, because I think for people who do use and are looking at using some decentralized exchanges, and I think for most portfolios, everybody kind of sprinkles this around into centralized, decentralized, and hardware wallets. Hardware wallets have been a big topic of here, obviously in the recent scenarios, because everybody's been a little bit concerned about exchanges. With that being the case, Ledger obviously has been, and Trezor, both are great products, but when you look at the integration of where we're seeing some of Ledger going, do you guys have plans, and how would an integration work with, say, a Ledger? Would it work just simply like a traditional, I'm going to connect my MetaMask to my Ledger, my MetaMask over to my dYdX, and technically I'm trading right off my Ledger? Is that still going to be the case?
Yeah, that's exactly the case. That's the case on dYdX currently, and that'll be the case on dYdX V4 as well. It works pretty elegantly. It's pretty similar to if you've used any other decentralized exchanges before, fairly similar to Uniswap. The only major difference is for dYdX, you do have to deposit before you start trading, whereas like Uniswap and others, you just trade right out of your wallet. And the main reason for that is because you have to store collateral on the exchange to margin your derivatives positions. So there's like one extra step, but it's a really easy onboarding process like most decentralized exchanges.
Yeah, so when just, because we test all exchanges and know, a little bit about each one, and especially on the decentralized side of things, when you connect now with dYdX, you're authorizing USDC, which is an ERC20 stablecoin. With that being the case and the flip over to Cosmos, how would that apply for an onboarding? Would you still be able to use an ERC20 or a USDC stablecoin?
Yeah, so one of the things that we're working pretty hard to get is a native deployment of USDC on Cosmos, on some Cosmos blockchain. One of the really cool things about Cosmos as well is it supports really native bridging between Cosmos chains. So effectively, once you get your token on some Cosmos chain, doesn't matter if it's dYdX or like the Cosmos Hub or some other Cosmos chain, it's really easy to move between the different chains. So we've been working with Center and a couple others, and this is not confirmed yet, still working on this, to kind of get a deployment on Cosmos. So you'll be able to enjoy kind of the same level of security for USDC, at least on Cosmos, as you would on an Ethereum. And then after we have that, and assuming we have that, kind of the plan afterwards is to get two things. Hopefully you'll be able to withdraw Cosmos USDC and therefore like dYdX USDC directly from centralized exchanges to dYdX, which would be a great UX. Like you want to pay gas fees, it'll be native. Yeah, that would be huge for onboarding. And then we'll also work with bridges to bridge over from Ethereum. But the thing I'll say about bridges and kind of the unique way that we're using them, or at least that we're planning to use them, is that we likely won't store the bridged assets on our chain. You'll kind of do the bridging over, then you'll swap your bridged assets for the native USDC. So you can still enjoy like just going from Ethereum to Cosmos, but you won't have to worry about any of the kind of risks of using bridges. And that was important because obviously security is super important for decentralized exchanges. And historically, we've seen a lot of issues with bridges.
I think that'll be a big feature, because right now, some of the big challenges that you have, if you are, let's say you're holding USDC, a stablecoin on a ledger, just the network fees to get it into a platform. So the ability to being able to bring that directly into a DEX is going to be pretty cool. Lots of cool things there with that integration. So I can see why now. I was kind of questioning the issue of why move to Cosmos with proof of work coming out or proof of stake coming out, and really seeing kind of a new advancements we'll most likely see with Ethereum. But I would agree. I think there's some interesting and intriguing aspects to it for sure. When you look at the overall market and you look at not only centralized exchanges, but also decentralized exchanges, really seeing a big hit in terms of trading volume. When do you think this is coming back? Is there any significance to the opportunity from just price? Or is it more of an adoption and regulation thing that you think will drive it?
I think price is usually the leading indicator as far as I can tell. So I'm by no means like a crypto macroeconomist, if that such a thing even exists. But I have been in the crypto space for 7 years now, so I've been through a couple of these cycles. And yeah, I think definitely the bull runs obviously attract a lot of new traders into the space. Every time we go up and come down, we end up an order of magnitude higher after the entire thing. So I think that's really encouraging progress from a long-term perspective. That being said, as you mentioned, there is quite a lot of negative price action recently, to say the least. A lot of crypto tokens are down 75 to 90+% in the past 6 months or so. We saw a bit of a rally about a month or two ago, and that's since come down in the past week or two. So yeah, it's kind of hard to say. I think if you just look historically, the kind of period of these up and down cycles happens to be roughly like 2 to 3 years or so. So that's definitely what we're planning for in the worst case. I think crypto's become a lot more mainstream. And like I mentioned, every single one of these ups, we get it like 10x or so more users. And I think with that, some of the volatility is coming down overall. And I think this time people are not like, oh, crypto is dead. Like, let's go on to something else. Surely some people are saying that, but there's still a lot of traders. There's a lot of action. I think there was just quite a lot of over leveraging in the market, obviously with the 3 Arrows situation, all of the lenders kind of going bust and all this stuff. And I think that just takes a while to shake out in the market. And then for people to be like, okay, that happens, like Luna blew up, 3 Arrows blew up. But I think the space is stronger off for it. I think it just takes a while for those effects to shake out.
I was looking at, we test swap features within a lot of different platforms out there because I'm kind of intrigued with, that element of how centralized exchanges are going into the swapping component, even to the aspect of swapping within a ledger, things of that nature. Then, of course, you have, the native platforms, Uniswap, Pancake, etc. What do you think are the future of the swap networks themselves, and also the integration of swapping within centralized exchanges? And how would that apply to, would it be a competitive landscape, or do you think that's going to be something that sticks around for a while?
Yeah, so in terms of competitive versus collaborative, it's probably somewhere in between. I have a huge amount of respect for what Uniswap has built. I think they're kind of the progenitors from a product sense of what made DeFi really big. Was that swap interface and just that really easy, both from a maker and taker perspective, to be a market maker if you want to be just deposits, to be a taker. It's like, okay, obviously I can swap my ETH for my Dogecoin or whatever I want to trade. So I don't think that product experience is going anywhere anytime soon. I think even if you look at a lot of other products, like even if you look at the homepage of Binance or Coinbase right now, obviously it works a little bit differently behind the hood, but they have that kind of same swap UI. So I think that's here to stay. In terms of how do I see the competitive landscape, like I mentioned, I think it's somewhere in between purely competitive and purely collaborative. We right now are doing about $1 billion a day in volume, and I think Uniswap, last I checked, was somewhere around $1.5 billion a day or so. So I think we're kind of 1-2 for the top decentralized exchanges by trading volume. Obviously, there's a fairly big difference in our products right now where we're just purely focused on derivatives trading and they're just purely focused on spot trading. I think you'll see both us expand more into spot trading, lending, et cetera, into the future. And I wouldn't be surprised if that were the case on either Uniswap or other decentralized exchanges as well. because that's clearly what the market has said that they want from a product perspective, right? It's like,
Right.
okay, if you just go look at Binance or FTX right now, it's like I can do derivatives trading, I can do spot, I can do lending, like all these things. And it's just really convenient to have that all in one product. I think one of the kind of superpowers of DeFi is that it's really easily composable, right? Even from a product perspective, it's really easy to kind of pull different types of protocols together to build a product that's just a one-stop shop for all of this. So that's something I'm personally excited about from a product perspective long term. And I think you may see dYdX and probably, I would guess, some others explore more in the coming years.
Let's talk. Okay, so that makes a lot of sense, I think, in the essence of how we'll see innovation really happen in the future of crypto, what we'll see in Web3, kind of really around decentralized exchanges. And I think also regulation is going to play into this in the future. Do you think that's going to have any point of contention for decentralized exchanges as we do see more and more governments getting into regulation for crypto?
Well, yeah, absolutely. I mean, I won't dive too deeply into it right now, besides a lot of the obvious stuff. Obviously, the SEC has taken a particular interest in a number of different tokens. Some of them are in DeFi. And I think kind of the biggest and most notable thing that happened recently was the Tornado Cash sanctioning situation.
Yeah.
I think that was a pretty big watershed moment for regulation in
For
crypto.
sure.
And I tweeted a lot about this, and other really good people did as well. So this isn't a super original thought, but it's basically the first time a technology has been sanctioned rather than a person or like a piece of property. And I think that was a really important step in, of course, what I would think is the wrong direction. So I think it's really important that a lot of DeFi comes and does really good work on the policy outreach side. And I think that's actually really important because just a lot of the regulators and a lot of the policymakers and people in governments all over the world don't have a great sense of what DeFi is. And I think they're starting to understand that right now. But we really don't want to let the kind of Lunas and Terras of the world dominate the narrative from what DeFi is. That is part of DeFi. I would like for that not to be the major part of DeFi going forwards. But I think there are really good people building great products like Uniswap, Compound, Aave, dYdX, and others. And I think we need to make that more a part of the narrative. So that's one of the things we're going to be focusing on going forwards is both just more public outreach for what DeFi is, like what do we think sensible regulation looks like, and then kind of meeting with potential people in government that are interested in talking with us as well about that. I think it's important.
Yeah, and I think to your point is there's a lot more good players than there are bad actors in the space right now. Obviously, the scenario with Luna and also the exposure scenario that we saw in over leveraging, that's a normal market behavior of risk, managers that in some cases just take a step too far. It's happened in many other categories in traditional finance, real estate, you name the market. We've seen it before. So in crypto was not bulletproof against that for sure. Let's get into the ETH merge and then we'll wrap up here. Because obviously with the ETH merge happening, DeFi will get, in many cases, could get some pressure here. Liquidity could also become an issue. What are your thoughts around the merge? Will this have any effect on DeFi as a whole in terms of liquidity over the next few weeks?
Yeah, so we obviously have been tracking the merge. I think we feel really comfortable about it. And I think the Ethereum team has put in a huge amount of work to make the merge as seamless as possible for decentralized apps like dYdX and others. So the good news is we don't really have to do too much to make dYdX work with the merge. It pretty much works just out of the box. We are considering whether we'll potentially just pause deposits and withdrawals onto the platform, basically into and out of like the rollup network. And the main reason for this would just be any potential network instability or any potential chain reorgs. And this is something that a lot of other exchanges are considering as well. We don't expect for any of this to happen, but we just kind of want to be safe rather than sorry. I think we have a lot of confidence that it should go well, though, because they've done this merge on like 4 or 5 test nets at this point. And dYdX has been on some of those. So we've literally done exactly the merge already with our testnet deployment, and it went pretty well. So not expecting any huge issues or issues with liquidity or anything.
Yeah, good to hear. I think because from people who have actually participated in the test nets, we haven't had anyone on the show that's done that. So the fact that you guys have gone through it, I think that does say a lot for how the merge will take place. And whether there is a hiccup or not, I think the key here is we will see a merge occur. I'm now confident of that. If we've looked at Ethereum over the past,
Yeah.
there has been scenarios where they've missed some dates, things of that nature. But I think this is a little bit different animal for sure. Let's go over to a poll real quick, and then I have a couple of questions from our audience to take a look. So are you waiting until the Ethereum merge to finally start trading again? Here we go. So this is, wow, a lot of people are kind of pulling back from the market right now, waiting for the merge. So 54% of the audience here that voted today on that one. Interesting that is, I kind of anticipated especially with some of the market movements yesterday, there were some opportunities to grab a little bit of some swing trades, and definitely if you had some leverage on those. So would have been good. A couple of questions coming in. How are you? Well, actually, let me go to Kryptonian. Yeah, here we go. Kryptonian, what were the other choices or competitors to Cosmos under the consideration of doing a flip? Did you look at any other chains?
Yeah, we looked at basically every chain that we considered to be legitimate, or that some of our advisors and investors did at least, as well as ourselves. So we looked at staying on Rollup, and that could have been something like a Starknet or an Optimism. Right. We looked at going on other layer ones, so like a Solana, or potentially like a new one like Aptos or something. And then obviously we looked into building our own chain, and the main competitors there were obviously Cosmos. And then we looked a little bit into building like a Polkadot parachain as well. So the kind of considerations between all of these were kind of what I mentioned before already. We took a look around at all of these, and we were like, okay, we need 1,000 transactions per second with low gas fees. Which one of these three can get us that? And we're like, none of them. So then we were like, okay, well, fine. Then what are we going to do after that? We have to build this kind of off-chain network to run the order book and run the order matching engine. And the interesting thing we realized is running the matching engine is effectively the same problem as coming to consensus. So we're like, okay, well, we would probably just use a technology like Cosmos SDK, which is just a technology used to build Cosmos blockchains to build that. And even if we ended up rolling up to like a Starknet or something, we probably would have had our own network. So then we were kind of just like, okay, well, we'll just like, at least to start, just build our entirely own network. We feel good about that from a security perspective, especially with like a native deployment of tokens. And we'll kind of go from there. But yeah, we're excited about it.
Excellent stuff. I think this is going to be an interesting time right now. It's definitely, I think, a very pivotal moment within crypto as a whole. So seeing a lot of things like in terms of technology advancements like what you guys are doing is pretty cool. And then obviously we're seeing a big move obviously with Ethereum. So lots happening out there for sure. It's been great talking to you today. Antonio, thank you so much for stopping in on the show today. We appreciate it.
Thanks so much for having me.
You bet. All right, so we're going to get to a couple other questions here. I know just to answer a couple of them, I know that you guys pulled a few off there that were on there. This is not a USA exchange. If you were using it, maybe you're outside the US or you're in other countries, you might be using a VPN, something of that nature, much like a Bybit or a Femex or other decentralized exchanges in which you can utilize these. So just one way. Remember also, it's not a bank direct deposit. These are bringing in from wallet connections. So just for some of you guys that are new, maybe just exploring decentralized exchanges, DEXs for the first time. That's one thing you can do. Maybe you are someone that is international, then obviously you guys already know, in most cases you're already connected to these types of products. Another thing too with the scenario with the fact that, and I think you made a lot of good points, because I was kind of actually in a position of not totally sold on Cosmos until he started explaining some of the cool feature sets that would really enable them to do some interesting things, including the off-chain order book, which I thought was really cool. This makes me a little bit more bullish on Cosmos. Even though I like Atom, I'm going to start watching this. We probably need to do a breakdown on Atom a little bit deeper. Maybe we can try to get some of the Atom team out there on this for sure. All right, you guys, if you're tuned in over on the podcast right now, Make sure and come over here to the YouTube channel. That's where we do all the live streams, all of our CEO interviews, as well as other types of deep dives, including trading analysis, as well as sentiment data and breakdowns, all that breaking out. We are going to have a 3 o'clock live stream today on this big issue with USDC and BUSD and Tether. So stick around for that one. It's going to be huge. We're also going to be revealing sentiment data on some of the top 20 tokens. So don't miss that. All of that's going to be coming up here soon on the show. If you are not subscribed to the channel, make sure and jump in. It's very simple to do. Just jump over to our YouTube channel. One thing I would say, if you are not subscribed, or maybe you are subscribed, one thing that I've noticed within the YouTube channel itself is sometimes, and this has happened to people that I know, because they've either tweeted me or mentioned to me on the Diamond Circle, is that they were subscribed and then unsubscribed. So I know YouTube is out there doing a lot of bot manipulation in terms of trying to get bots off. So maybe they think you're a bot. So make sure that you are subscribed, where that subscribe button is grayed out. If you guys want to reach me, it is out there on Twitter @Paul Barron. We'll catch you next time right here on TechBath.